Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. So since last Friday, gold has been on a wild ride, recording a new closing high of $21.28 yesterday. The lackluster ISM index sparked talk of rate cuts, which in turn dropped down real interest rates, fueling this explosive growth. Plus, worries about the New York Community Bank crashing and geopolitical tensions heating up sent folks scrambling for safe havens. Traders are now eagerly bullish on gold while keeping a close eye on Powell's testimony to Congress and the U.S. non-farm payrolls report later this week to gauge where gold's headed next. So now, let's rewind and dissect the past 3 days of gold's skyrocketing journey on the gold against US dollar daily chart. Towards the end of February, gold was still stuck in the tight trading range between $2,000 and $20.66 since the year kicked off, with bulls and bears at a standoff. But last Friday, out of the blue, buying pressure surged, busting gold prices above the upper bound and clocking the biggest single-day gain since December 13th last year, shooting up nearly 2%. That strong bullish streak carried on into this week, with gold smashing through new highs for 2 straight days, and yesterday briefly brushing shoulders with the historical high in early December. If prices can close above $21.43, the bulls will feel emboldened to explore uncharted territory. However, with the RSI showing gold's overbought, any pullbacks could find support around late December's high of $20.88 and upper edge of the range at $20.66. Behind gold's recent surge, 2 main factors are in play: a dovish reprice about Fed rate cuts and a surge in demand for safe havens. First off, both the US ISM manufacturing and services PMI for February came in below expectations, with the firmer staying stuck in the contraction zone for the 16th month running. The softening employment sub-index, especially ahead of the non-farm payroll report, has folks on edge and increased bet on a Fed rate cut by June. Plus, Fed voters Waller and Logan hint at increasing share of short-term treasuries, CMBS holdings to go back to zero, and slow asset runoff, suggesting more liquidity might be pumped into the system and further rate cuts can be introduced by the Fed. This has dragged the real yield on the 10-year US Treasury to around 1.8%, making gold more attractive with lower opportunity costs and sending its price soaring. Secondly, the U.S. banking sector has hit another snag, with New York Community Bank stock nosediving over 25% on March the 1st, while both Fitch and Moody's are slashing ratings. Add to that the looming expiry of the BTFP Emergency Assistance Plan and the sharp drop in overnight reverse repo usage from over $2.2 trillion in the middle of last year to under $600 billion in January. It's quite understandable, I reckon, that folks are jittery about risks in the US banking and commercial property sectors. Plus, the ongoing uncertainty surrounding the Russia-Ukraine conflict and the U.S. presidential election are keeping tensions high. With gold being the go-to safe haven in times of turmoil, it's no surprise it's on a tear. So in a nutshell, recent strong buying has propelled gold prices higher thanks to a dovish re-evaluation of Fed rate cuts and a surge in demand for safe havens. Momentum trading in gold and gold minor ETFs in options market, as well as central banks purchases, have also been providing a fertile ground for gold prices appreciation. It is worth noting that the US dollar index has not shown a significant decline, and as the Fed meeting approaches, investors need to be cautious about chasing highs. And looking ahead to the rest of the week, Powell's testimony to Congress tomorrow night could move the needle, especially if his tone leans dovish, which might give gold prices a lift. And keep Friday's US jobs report on your radar, as a softer than expected non-farm payroll, say below 150,000, or a rise in the unemployment rate, could stoke rate cut expectations and give gold another boost. So that's pretty much for this week. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!